Here are 3 things to know before you invest in stocks. Don't forget to leave a like and let's start. In this YouTube channel, you've learned how to analyze stocks. There are some videos over there, you can check them out. I want to say that stocks are companies. Stocks are not a piece of paper with the stock price that is moving up and down. Behind every stock, there is a company. So when we analyze a stock, we analyze a company as a whole. And when we buy a stock, we are partners of this company. If you buy 1 share of Apple, you own 0.00001% of Apple. So you are an owner. Stocks are partial ownership of businesses. It's like if you had your local barber shop and you own 1% of your local barber shop. This is this owner mentality that I want to give you, because the goal of having this owner mentality is that you don't think about the short-term fluctuation in the stock price if 1 week is going up or down. You own 1% of your local barber shop. So you think in years, you think in decades. So when you buy a stock, you are a partner to the management team of a public company. And I'm telling you, we are the minority. Most people, when they think of the stock market, they think of stocks going up and down, prices, people on TV, green, red, and that's it. They want the stock to go up. But we are business analysts. We want to invest like Warren Buffett. And what does Warren Buffett do? Proper due diligence. He analyzes businesses like an owner because he wants to know everything about the business, about the management team, so he can put his money in these great businesses run by great management. And if you are a public company, if you are the CEO of a public company, you have a fiduciary duty to all your shareholders. It reminds me of in May 2024, when I went to see Warren Buffett in Omaha for the Berkshire Hathaway annual meeting, and we were 50,000 people. And at the beginning of the meeting, Warren Buffett said, "You, 50,000 people, you are my partners. I care for you." And us, as shareholders, we care for Warren Buffett. We want management to be good because at the end of the day, the companies that care about the shareholders perform better in the stock market. Their stock prices increase more in the long term. So that was for my first point, so that you understand this owner mentality. And that's also why we will do all this analysis. We want to know everything about the business, the fundamentals, growth catalyst, who is the management. We want to check the decisions that a company has taken in the past. All these things. We do a proper due diligence, proper analysis, because we plan to be owners of these companies. So that was my first point. Stocks are not lottery tickets. Stocks are partial ownership of businesses that happen to be public. The second point is that the future is uncertain. So we don't know what will happen in the future. We don't have any crystal ball. That's why in our analysis, we will be conservative in the numbers for the growth, for the forecast. So we plan to have a margin of security in our analysis. We will not try to be bullish, to be very optimistic, exponential growth, because most of the time the future is not as expected. So we are in the business of making forecasts, yes, predictions, yes, but it's tricky and nobody knows the future. So we plan to be conservative. Don't worry, it works. That's the way Warren Buffett invests. But just so you know, we will have a margin of safety when we do our analysis. We will play safe. And the third point is to invest for the long term. Because in the short term, markets are very volatile. A stock doesn't know you own it. So you can buy Apple stock and the next week it will drop 5%. 10%. Everything can happen in the stock market. Our strategy is not to focus on the short term, but to focus on the long term. So we will focus on key elements that make stock prices go up over time. You will learn these elements, these key metrics that make stock prices go up. And yeah, that was it for the third point. Invest for the long term. Don't play the market. Don't do short-term stuff. That's not what we're going to do. We will not trade in the short term, focus on 1 week earnings or 1 week drop in prices or 1 month. No, we think in months, we think in years, we think in decades. That will be our strategy. And by doing this, by avoiding overtrading, we avoid transaction costs, transaction fees. Every time you buy, every time you sell, you have to pay a transaction fee. So we avoid paying these fees. And the second advantage is it's less stressful because we don't have to follow what is happening every day in the stock market. We don't need the stress of, oh, I have to buy something this week or sell this investment because of this and this. If you think in years, you have to do the analysis once and then hold because you've done the work before. So less stress, less transaction costs, and you can focus on what really matters. So I will show you all these elements so you can focus on the best companies. These three things will make you a better investor. They will help you achieve a good performance over the long term. And if you want more tips like this, I have a link in the description below. You can click on it. It's completely free, where I explain my exact method to invest in stocks, to invest in the best companies at the best price. That's my complete method. Just click on the link below. It's completely free. It's a free masterclass where I give a ton of value. Well, that's it for today. You have another video over there. Don't forget to leave a like and subscribe for more videos like this. Okay, see you over there.